From the Street's newsroom in New York, I'm Jill Malandrino for The Street with the weekly recap and your trading week ahead. Let's quickly review the 5-day on the S&P and what a week it was for traders, as nearly 40% of the S&P reported, and a bunch of heavyweights like Apple, Amazon, Facebook, Google, and the industrials did as well. Earnings have been mixed so far, with some decent top-line beats, but the ongoing concern is bottom-line revenue growth and, of course, the foreign exchange impact with the recent surge of the U.S. dollar and energy price declines. We also saw a huge buzz around the Shack IPO Friday morning, as that new issue opened at $47 after being priced at just $21. Looking to your trading week ahead, earnings are still in full swing with almost 20% of the S&P 500 reporting, with a focus on energy and healthcare names. Obviously, the energy trade is key as crude continues to find its footing, so pay close attention to management commentary out of names like ExxonMobil and Apache, and even companies like General Motors and UPS, as those two are closely tied to the commodity. In addition, the non-S&P 500 calendar is really full, with all eyes focused on Twitter earnings Thursday after the close. The key focus on the data front is jobs, jobs, and more jobs, as is the case with the first week of every month. The key non-farm payrolls report is expected to be released, as well as the Paycheck IHS Small Business Job Index, ADP employment, and Challenger job cuts. The most important pieces of the jobs pie is wage growth and participation rates, so expect trading to whip around those two data points. Moving along to crude, taking a look at the 5-day, you can see the commodity has finally found a range in the $43 to $47 area, just like we saw last week. Oil traders I speak with on the NYMEX trading floor believe we trade here at least for the next month or two until some players are shaken out and OPEC and non-OPEC members provide some sort of clarity and production levels and pricing. Until then, consumers are enjoying the prices at the pump with more disposable income, while energy-related stocks and oil-dependent economies remain on edge. Finally, the yellow metal is back below the $1,300 level it briefly touched the week of January 19th. But it still remains in that 40-ish range-bound area, as has been the pattern for quite some time. Even still, gold's performance has been relatively impressive, with the U.S. dollar highs and the overhang of an interest rate hike at some point in the future, but of course, that's anyone's guess. So as you can see, we have another busy week on tap. In the meantime, have a fun and safe Super Bowl weekend. For The Street in New York, I'm Jill Malandrino.